My name is Afsaneh Beschloss. I'm the CEO of the Rock Creek Group. For those of you who have not joined us in the past, at the Rock Creek Group, we invest in multi-asset classes as well as in alternatives and impact investing. We've had a very, very eventful summer this year, and we've had the UK Brexit vote. We've had a coup in Turkey. European bank stress tests, Japanese easing, and important monetary policy questions in the US, as well as getting into an election season. And EM equities are up 6.4% year to date. I'm very excited to have two of our advisory board members with us today, Dr. Greenspan and Liaquat Ahamed. On the US side, the economic data has been mixed. We had recent GDP numbers that came out, recent employment numbers that came out. And I was curious to hear from both of you what your thoughts are in terms of where the US economy is headed.
First of all, let me just say that the economy is in a state of stagnation. The issue is not whether we're recovering or not. We're not moving. We are essentially producing only those assets with life expectancies 15 to 20 years and less. There is a very significant part of the economy which has gone dead. And the reason for it, basically, if you look at the data, is that there is an extraordinary rate of discount on the far distant future. For example, I find something which moves, which is the best statistic I know in this regard, is the spread between the 30-year US Treasury on the one hand and the 5-year note. That picks up the so-called term structure from 5 years out, and what it is saying is it's rising very rapidly. And while people are saying that there's no evidence of crowding out, they're looking at the wrong data.
I'm focusing on another aspect, which is the very slow growth of productivity. And that is in part because of what Alan alluded to, which is the very slow business investment. But because of that, despite the slow growth of the economy, we are close to full employment. And we're running out of room to grow, even though we've grown very slowly because of slow productivity growth. So I think that has several implications. One is that we are much closer to Fed tightening than the market is discounting. And the reason that the Fed has not tightened, it's been in a, there's been a sort of argument between the hawks who point to the low unemployment and the doves who point to the threat of international events derailing things. And the two international events that they were worried about, China and Brexit, are behind us, I believe.
You both think a lot about how thinking is in major central banks, BOJ in Europe with what's going on. And we've seen the negative interest rates. We talked a lot about that last time. Where do you think that is going to go, and how is that going to impact markets, Liaquat?
The Bank of Japan and the ECB are together buying about $200 billion of government bonds a month. So that's $2.5 trillion a year. 3 years of that, and you'll end up with $7.5 trillion in the hands of central banks in those countries. And as a consequence, this last bond rally, or the last couple of years, has essentially been led by a massive curve flattening as the long end has progressed, as rates in the long end have gone progressively further down. The signs are that QE, this policy of buying bonds, is losing traction. It's having less and less impact on the real economy. It's causing less and less impact on long-term yields. I don't know how this whole thing ends. But I would say that that is the driving factor behind negative rates, this global bond rally. And as a consequence, that is behind why rates in the U.S. have gone down so much, that inflows into U.S. bonds from foreign bonds have ballooned because no one wants to hold negative yielding assets.
If we could sort of switch to the Brexit vote. So my question to both of you was, what do you think will happen in the UK, but also what will be the impact, if any, more broadly in Europe and in the broader global economy, if any?
Well, as you know, the short-term data in the UK is weakened.
Right.
But not a great deal. I mean, actually, I think that the structure of the UK is not all that different from the rest of the world. My main concerns are largely in Europe, not so much the UK. Remember that there's more flexibility in the UK financial system than most anywhere else in Europe. And the result of that is that that's going to help them.
I think people are realizing that Brexit is nothing dramatic is going to happen in the short run. Not even short run, in the next 7 years. So as a consequence, things will continue pretty much as normal. Now, there are some disaster scenarios out there. The UK breaks apart. I don't know what probability you put on that, 5 to 10%. The EU breaks apart because there's some other country that maybe Italy, maybe Hungary, the referendum go against the current arrangement. But those are sort of 5 to 10% probabilities. The biggest sort of betting is that you actually have status quo for the next 5 to 7 years.
So Italy has been in the news. The banks in Italy have been in the news with their massive non-performing loans, and the Prime Minister seems to be in a bit of a bind. We don't hear very much from Mr. Draghi these days. What do you think is going to happen in Italy? Is that going to be a big problem for the rest of the EU?
Post-Brexit, they've actually rallied around the flag, the rest of the Europeans. They are not going to force the Italian banks to hit their bondholders. It would make and the history of the EU is they can always stitch a deal together.
Now, one of the things that has happened in both China and India, especially, is talking about the green economy, but not just because they do believe or they don't believe in climate change, but their cities have become impossible to live in. Number one. Number two, they're seeing these are pretty good investments to be making in terms of the long-term economic growth. Do you see a scenario where, just like in the case of China, there was that huge infrastructure building post-2008, there will be this huge wave. They now have the largest investments in solar and wind power in China. Will these be the areas they will be emphasizing more and sort of trying to redirect their economy into?
The regulatory structure in India is still basically devastating. And you can't expect the system to move. There are lots of reasons as to why India doesn't grow. But the fact of the matter is that it doesn't. And to a very large extent, productivity in the agricultural sector is not sufficiently adequate to enable people to move out of agriculture into non-agriculture in sufficient quantities.
Very interesting discussion. Thank you so much, Alan. Really appreciate it as always. Thank you so much, Liaquat. Look forward to our next discussion. Thank you.